Hey traders, what's going on? Jamie Saettele here. It is Thursday, September 28th, and nearing the end of the third quarter, believe it or not, um, here in the markets. So let me know if you can hear me. This is the Midweek Strategy webinar with Jamie Saettele for SB Trade Desk. Peter says, I hear you. Great. All right. Before I dive into the charts and analysis and thoughts and everything else, please make sure that if you're sitting there with an itchy trigger finger or something, right? We're looking at the euro, this bounce that we're getting that we were looking for. We're looking to sell it, or I'm looking to sell it, probably up near 1825, 1828, right? Something like that. And I look at this chart, US dollar, the index is kind of confirmation, maybe on dollar support in the near term. So we'd want to see, basically a drop and hold, or a drop into 11,909 or so, which is the month open on US dollar. So just a quick reminder on that. All right, going into the analysis. So first, let's look at we'll do some concentration on the dollar. So we kind of have some, there's always going to be conflicting evidence, right? As far as, is this pullback in the dollar? So we've gone right here, right? And this is a level, kind of the 117, that was yesterday's low is 117.16. This is a level that if this is just a dip, then you probably start to hold here. So all else being equal, that's what we'd be, kind of actually be looking to go long euro here. But again, all things are not equal, right? I said all else being equal. So they're not, because on the near term we've got that looks like an incomplete advance, right, or decline, sorry, in the dollar, or in euro, rally in the dollar. We've got the very extreme reading too, right? Previous extreme with the RSI thing here with euro. So is it something like this, or is it something more like this, right? So that's what we've got to try to figure out in the answer. So when we look at DXY, I'll bring over this chart first. When we look at DXY, remember we actually had, sitting on Twitter one night as the dollar was tanking. Some of you might have been on Twitter at the time. And remember that gap? I think it was September 8th. We filled the gap back from 2015. That ended up being the low. Ended up being the low. And if we look at this longer term chart, which I do kind of prefer the longer term views because it keeps you from getting too crazy on the short term views, the textbook place for resistance in DXY is going to be a little higher. Up near 94, right? 94.08 is your August 2016 low. Okay. Obviously, that level was also resistance in August 2017. Vladimir has got questions on nat gas and wheat. We will look at both. You know what I'm going to do? I'm going to put up euro because I want to know where it is. All right. So yeah, this level here is where I think we're going in DXY. And that's literally the exact same thing as saying that I think euro is going to dip closer to 116, than hold here, above the 117 mark. Okay. And if I, go down 60-minute chart, this would be the bearish case, right? A, B, and then 1, 2, 3. This is a 4, and then higher 5, and that would be your A, B, C. But even if it is, say, and the line's now up here, but even if it is a larger advance, in other words, even if this is 1, 2, and then this is 3, you'd still expect to see a pause, and maybe even a fourth wave, right? So the levels for me and the trading for me over the next day or so in euro is really quite clear. The levels are really clean, right? We want to be selling euro up into this level. We'll go to the euro chart here in a second, but I'm going to be selling euro up at that 1820s, and then looking to take it down right into the 116s, and then maybe even flip long down there. Okay, let's look at the analog now. Now here's another piece of evidence, right, that we've got to consider. The analog, which we presented a while back, and it's, these things rarely work out like this, but it has worked out this time. So here it is. So this crazy compared with the 94 top, it's just been really quite perfect, I guess, in that, you've had a move higher. And this is, if you even go down to daily, this is what it looks like, right? So, this says that we could be higher until November. That actually kind of fits with the seasonal stuff a little bit. But again, this doesn't change my trading plan as far as wanting to short euro, be long dollars on this dollar dip, but then looking to get out and potentially even flip. So again, something to keep in mind. This all goes to speak to the sense that you're never going to be 100% right. You're never going to have a map for the future, right? You can have different pieces of evidence that you're looking at, though. It also helped too when we look at general sentiment. We've had a lot of good ones lately as far as the newspaper headlines and stuff like that. I mean, you start to see the general sentiment shift towards, well, now the dollar's as the bull market's returned, right? We'll have a good idea of, well, now it's time to go short again, the dollar. All right, that might not necessarily be the case for the euro, though. It might be more British pounds. So let's go to euro first. Probably don't need a whole lot of explanation on this. I mean, it's pretty self-explanatory, right? We were looking for this hold here on the median line, and we got the hold. We are getting the bounce, and I'm looking for the bounce to end at 1827 to be specific, and then a drop down into, say, 1580s, 1620, something like that. 2016 high, of course, right, is 1616. So I would place heavy emphasis on that. But the next parallel, the parallel is working out pretty well here. The next parallel is a little lower, right? That was pretty good recently, as in, July, or I guess late June, and then kind of the launch here on July 20th, right? So don't overthink it. Just know these two spots, 1820s, and then I give it a 1580 to 1620 range, okay? Let's move on to cable now. So the British pound, on this next, say when DXY gets up towards the 94 area, remember, 94, 9408, something like that, that's when I'll probably want to be looking seriously at a British pound long, right? And maybe a kind of a swing, even position type long, right? A bigger trade on the long side. Here's why. We go to this cable chart. analog that we've had since February. Right, this is the 1989 low. Look at this. It says the dip is essentially coming to an end. Here's the daily comparison. Okay. So when we go and look at the chart, say just a simple price chart, we will notice on the weekly chart here, you know, weekly chart wise, right, we're right around this median line. Okay, so can we come back into 32.67? That's what I'm hoping for. You know, just like in, I guess it was late August when cable dropped down to the 27.73, you know, we can't lose sight of the fact that there's really important horizontal levels in play at all times, right? It's not just the fancy slope or a moving average or an indicator or whatever. There's a lot of other stuff going on here that, you know, simple stuff that we need to pay attention to. And that December high, 27.74, recall. Okay. So we held here. Look for something similar if we get down to 32.67. All right. That would be, again, the August high. You know, other than that, we've got the short-term chart that we were following here. You know, I'd still look at these levels as far as you know, trades. Basically looking up near 135. You know, 34.80 to 135, maybe a little higher than 135 at this point. Kind of looking on the parallels at this point. The euro pattern, as mentioned last night, is much cleaner. So I'd be focusing far more on a euro short into, say, the euro resistance up at the 1820s than I would be maybe a pound short here. But the level is there. You've got, you know, you've got the parallel here. Was decent as far as being active earlier this month, and you know, we did fill the Brexit gap on the FOMC spike up here at 36.50. So, you know, a bit more downside would not be a surprise. But again, I would be looking for that hold near 32.67, right? The 20-day average now is a little higher than 32.67, but you get the, you know, the general idea is to look for a low down in this region. Let's just see if we were to get some sort of a complex, say, correction of some sort, what would happen? Two equal legs would actually be quite lower. Yeah, either way. Focus on this area as resistance, right? So we're getting pretty close. You know, and do not lose sight of the fact that this is still an uptrend with bullish slope, and this very much is, to me, is going to play out as a corrective process, right? So don't get blinded, if you will, by the sudden dollar bullishness, especially as it pertains to cable. Another thing with cable and euro for that matter is, you know, is euro pound actually maybe showing us or suggesting that cable is the much better long against the dollar when it's ready, say, than euro, and maybe euro is a short, you know, a bigger short than, you know, than we think. So if we bring in, here's euro pound. Okay, long-term chart here. Okay, it's sent, these slope lines are just off the 2000 in 2007 lows. So you get the idea. But the next support for this is probably not even until 84. Okay. It's going to be not just a slope line down here, but it's also pretty close to the lows back in 2009, right? So looking down towards that region, in euro pound anyway. So if you're bearish euro pound, does that mean you're bearish euro dollar and bullish pound dollar? Not necessarily, right? But when I look in the context of the dollar and kind of looking for, if you will, or thinking that we could see, a decent pause in dollar strength at 94, then you're probably going to want, to pick the better of the two to play. And my thinking is that it's probably the pound, right? That's, based on this. And so if we look at, let's go to a daily chart now, and then we'll zoom in even more. We have a trend line here, maybe. Let's see. I think we're probably right on it. Yeah, looks like it. So we're probably right on this trend line, more or less, okay? And that, once that goes, then you're on your way to 84. But you can see if you zoom in, you probably don't even need to, but you've got a pretty clean impulsive decline here. Right? I'd call this, maybe 1, 2, 3, 4, 5, something like that. Either way, bounce is a sell based on that impulsive nature and the longer term levels. So am I going to trade euro pound? Probably not. But it's in my mind as far as positioning, for the next dollar move on the downside, right? Rather do it through the pound dollar than euro. That's the point. Okay. How about let's go to Aussie next. We'll go to Aussie next. Okay, so the Australian dollar has rolled over before getting to where I thought it was headed, but that's okay. It'll get there eventually. So where now? Simple answer, because we all love the simple answers, is the blue line. Okay, that's where we're going, in my opinion. Right down here, maybe a little lower. Right, 76.40 would be, if I make this a blue line, make the downward sloping one a blue line, then we would have right here. Okay, so that's your old channel support, which was resistance for the most part back in March. Didn't quite get there, I guess, but it was resistance in June. So if you were to get back there, it would be support, but I'd also look here. And, we can look at this on, here's the little, a little more color on it. But the 200-day average is down there too. This is the same, we're looking at the exact same stuff here, by the way. So is there a trade here? Because if I think we're headed here and go short, well, yeah. So the median line is about 78.90. That's going to be resistance. All right. And if you were to get there, then 79.33 would be resistance. Okay. And that is the 9/21 high volume day close, right? 921. What was that? That was the third. That was the day after FOMC. Yeah, FOMC was right here. This is the day after FOMC. Pattern-wise, this might be something. This might be a flat actually. So, maybe A, B, and then we're looking for the C down. 1, 2, 3. Could go a little lower. Bounce 4 or 5. While I do some Elliott stuff and pattern stuff, and when it's there, it's clean, like Euro's clean right now. I much prefer to focus on the levels, because at the end of the day, that's what you're trading. So we have come into some sort of support here. This is actually a slope line right there, right? There's resistance back here on June, resistance back here in late 2016. So allowing for a bounce here, and you do have the 78.34 2016 high, way over here, right? But if you get a bounce back to 78.90, I'd start to look at a short position in the Australian dollar, okay? What else have we got going on here? Copper's turning up. As I see right now, copper's up 1%. Go to Kiwi. Kiwi's actually holding up quite well. Kiwi's already at its 200-day average, as we know. Kiwi's holding up quite well. You've got 71.75 is the month open. Tomorrow's the last day of the month. So Kiwi hasn't really moved. On balance, of course, it has, obviously, as we know, it has moved. Did have a decent long up here near 74 earlier this month. It was actually after FOMC. But yeah, this general area, holding as support. The more important level for me is still this down here, right? Not sure if you try to test that or not, but you do have this parallel, long-term parallel, obviously, very important. Resistance, resistance, resistance. It's been support a number of times over the last couple of months, right? July, it was support, and then it was more or less support earlier this month. Okay. So as far as Kiwi is concerned, yeah, I like it on the long side. I like being bullish Kiwi, right? Just let the kind of the dollar stuff play out here a little bit. So I'd, rather not just be long Kiwi until we get the dollar kind of whatever is going on with the dollar, the rally right now, kind of get that out of the way up near the 94 area in DXY. So I'll leave that there, but Kiwi is certainly constructive, right? It's at support, trying to hold. Do we get a flush month end tomorrow or something? It's always a possibility, especially if you get a little, one more dollar push. But Kiwi might be something you want to put on the crosses, right? Like Euro Kiwi actually on the downside isn't a bad look here. Right, you've had this drop, you're within an uptrend, and you've had this drop, but we've gone drop, and then rallied back to, kind of a breakdown level here, right? Not the best, cleanest idea out there, but, trading within a channel, looking for it to maybe head to the lower end of the channel, which would be down probably near not far from 159. All right, dollar CAD, and then we'll look at crude oil, gold, and some yen stuff, and we'll go from there. May take some questions after that. All right. So dollar CAD was looking good for us before Polos opened his fat mouth yesterday. We were right up on this resistance, right? With all of my heart and soul, I thought it would hold up. Otherwise, I wouldn't have been short, but it didn't, and took a small hit on that. But we're back now, I guess, at the next level you'd consider for a potential short position. The 124.60, 84 range, right? 24.60, of course, being the 2016 low all the way over here, and then 24.84 being the month open. So it's been a round trip, right, for dollar CAD so far in September. This is also the median line, right, from the entire channel that stretches back to the 2016 high. So really, this is kind of the spot. I mean, tomorrow you got Friday, so I'm always aware of the Friday high scenario, right? Tend to get that Friday high, and then tomorrow is, of course, the last day of the month and quarter. So you're gonna have that possibility of getting, some wild kind of fixing type price action. So I would be aware of, I guess, this parallel up here at 25.30, but other than that, I would give very little room on dollar CAD if you're looking to short it up here. This is not something for me heading into tomorrow. Again, I'm going to concentrate and keep my focus on this Euro chart and pound to a lesser extent because they are so clean, right? The levels are so clean. And, it might as well pay attention to the cleanest one out there, which, in my opinion, is Euro. That's what I'm looking at here. But, yeah, dollar CAD, it's still a good-looking chart as far as the levels are concerned. The pattern leaves much to be desired. I mean, we were thinking 1, 2, 3, and then bounce 4, 5 for a low. That's kind of out of the question now because you've gone way too far, right? So what's going on here? I mean, this drop is in 3 waves. Do we have a larger correction going on? Sideways pattern that's going to develop? I don't. The pattern's not really there for me, but the levels are clean, and you've traded up into a resistance point now. All right. So it's okay to look on the short side here. Again, I wouldn't give much room over 25, 35 or so on the upside for dollar CAD. And if you're thinking about, where would you have support? First obvious level is going to be about 23.90. Okay. 24.15, 23.90, something like that. Remember, this magenta line is the old trend line. 2012, 13, 14 trend line. We've seen some trading around it. We broke it, rate hike, and then might as well have never happened because now we're back above it. But that trend line was also resistance after the Fed, actually, and then the day before yesterday. So still a level to pay attention to. Okay, let's transition to commodities. After looking at dollar CAD here, we'll look at crude oil. Crude oil haven't really had much of a relationship with dollar CAD and crude oil in 2017. Right, you had the huge breakdown. You had the huge breakdown in dollar CAD earlier this year, and crude really didn't care too much. So here's where we are with this is the picture we've looked at, near-term picture. We have broken out. Not a whole lot to brag about on this. I mean, we've traded into 52.45 today, which is actually the first day of the year closing price. So that's your high day close, and crude is in the process right now of maybe reversing a little bit. Some of you might have seen the tweet I put out earlier, but XLE hit, that's the ETF, the energy sector ETF, hit its 200-day average today. Okay, and that might be a warning or something that maybe you've got oil in general about to kind of underperform for a little bit or pull back. Right, here's the 200-day average. You can see 200-day average in this is really pretty useful, has been, especially when you're coming off a big low. Right, like when we came off the big low back here in 2011, look what happened. Same thing back here in 2010. But as it pertains to the price of oil, I'd stay constructive crude, but again, allowing for a pause here, a pullback, or whatever you want to call it. I'd still look at the median line of support. I still think that you're going to get up towards 53.90 or so, which is actually where you opened the year on crude, and the channel line is up near there as well. You've got a long-term parallel up near 55. It is somewhat of a concern to me that you have had, say, if we look at Brent oil, right, that's traded to a new high for the year. This is Brent oil, or CFD is called UK oil, and that's already traded to a new high, okay, whereas US oil or WTI oil, right, has not. That's a concern for me, because that divergence is something that we see, it turns. Case in point, this happened at the 2016 low, right? January 20th was a low in Brent, and then February 11th was the low in, or the secondary low, higher low in Brent. Well, look where that was. So this was the low in Brent. WTI went to its low on 211. So you have the exact opposite situation right now. Okay, you've got that high in Brent up here. WTI is still below it. So that gives me some concern or reason to maybe pause a little bit on this oil run. That doesn't mean I'm like full on bearish oil. I mean, if you're looking to trade some short term on the downside, then go for it. But I think oil is headed higher. think we had that with, yeah, here's the long-term chart, which I have shared. Here's the weekly chart. But the importance of the hold on this median line really cannot be, discounted. So I think we go to 65. But again, with the Brent crude disconnect, maybe you get a little bit more of a pause here. That's all. All right, we'll go on to gold now and then some yen stuff. Okay, so we are making our way, I think, at this point. Down towards 1260s or so, 1267, something like that, right? That would be the low actually from this week and that week in August. Go to a daily chart. That would be the low right here from 815. This blue line, I mean, just beautiful as far as the precision with which the markets acted on it, right? It was really good resistance, obviously, 2016. This is log chart, by the way. And yeah, we got questions here. S&P DAX, 10-year nat gas wheat. I'll get to them, don't worry. But yeah, this, if you're going to go into a bull market in gold, then you're probably going to do it down here, right? So if we bounce, which we might, gold's taken quite a hit. If we bounce, then it'd be looking for, I guess, would be looking for resistance. Well, 1301 is a high volume area, so that would be the first area I'd look at. And that'd probably be about it, right? At this point, I mean, we've come down so far in a relatively short amount of time, 1355 to 1278. Wouldn't it just be best to get this thing over with and just get down into, the 1268, 69 level? So yeah, look for that level again. It probably will be, it will probably coincide with some sort of a resistance point in the U.S. dollar or DXY up in the 94s. Yen crosses. Do we have to look at dollar yen? Dollar yen, it just kind of gives me anxiety these days. I don't like this thing. So there's a case to be made for the crazy long-term dollar yen is going on a run for like the next 3 years to 150 or 60 or something. Even if that's the case, you're probably going to pause here. That's what this says, at least. Right? There's a whole video on this analog. You guys are very familiar with it. But near term, it's on the long-term page, by the way, long-term page, and then go to dollar yen. It's back in February, and we got this bad boy right here, right? The whole explanation on it. Where were we? Here we go. Near term dollar yen. Okay. This line is red for a reason. Actually kind of weird, right? Typically you'd see, so like yesterday we did have this move higher, but with the extent of the move that you had in US treasuries, there really was not much to write home about. I'm torn here. I mean, just on this chart, dollar yen's at resistance. Okay. I don't really feel like selling it, the narrative that I tend to believe right now is that, yields are going higher, bonds lower, and that's certainly not supportive. It's mixed with other currencies, right? You can't just make a blind statement and say, oh, higher yields is dollar bullish, because it's not, right? It's yield differentials, but the Japanese yield doesn't move. Okay, so in that case, it's typically dollar bullish or dollar yen bullish. Based on levels and just simple near-term stuff to watch out for. This is a shift fork here. You can just draw a line off the 914 low and the 926 low, and that's kind of your, to me, that's your support. Okay, if you are going higher like now, next level would probably be up near the swing highs over the last couple of months, right? But that would put you down. 1220 is actually what we opened the week, I think, at 1220. Yeah, so 1220 is the week open. 1233 is the high volume level. Again, that's FOMC over here. So, you've got that support to look forward to over here before you can maybe take it to the upside. This is going to get a little messy looking, but if I scroll out, I know there's a lot going on here. But if you look at the really long-term slope that we've been following for a long period of time here, all year, you've got, see this parallel? I'll make it magenta here, magenta parallel. Where are we? What is that? Yeah. So magenta parallel. I say look at it because it was so good, back in 2016, right? On the way down and then on the way up. You even had some consolidation around it after the election during the Trump trade, as they say. But that level is going to be up here and kind of, early in October. So like next week, it's going to be up here, which is in line with these highs. So if you do have one more leg up, which again, given my view on treasuries, would not be much of a surprise. Then one, I want to see it hold 1220, 1230. Okay, so that's support. And two, this is where you might go. Now, I say that, but let's look at some other yens. We looked at these charts earlier in the week. And we had Aussie yen, right? Euro yen, and the Nikkei. All right. So we had divergence. This is Aussie yen weekly chart. You have divergence up here and really big horizontal, barrier, if you will. Just lots of highs, former highs and lows around this region. And if we look at the daily, you have a clean channel, but you're kind of getting lower ceiling here. Okay. Is this maybe a 1, 2, 3, 4, 5? This is certainly 5 up from back in April. So there is the potential, in my view, for a larger pullback in Aussie yen before you can go higher again. So that kind of gives me pause on the immediate, dollar yen bullish thing, right? Euro yen too. Remember, Euro yen retraced exactly 618 of the decline from 2014, right? typically think that you're going to get a bigger pullback than just 1 week from this huge level, and it's not all that's there. You've also got, October 2014 low, December 2015 high. I mean, there's a lot of stuff, right up in this region, I guess over here too, right? May 2013 high. So again, to me, this suggests more than just a 1 week pullback being such a huge price level. And then we zoom into this chart, which we have earlier in the week, right? We got a 5-wave down, and we're currently, rallying. We're looking for 3340 resistance, which is 618, and the weekly opening price might be a little higher. Median line's a little higher. It's a little slower developing, but still the same idea. And then there's the Nikkei, right? And speaking of divergences, the Nikkei is almost above the June 2015 high. Dollar yen's not really close to that, okay? That drastic of a divergence probably needs to be resolved before, before you can go, higher in dollar yen and higher in the Nikkei. And again, you have the momentum situation too, which is, again, divergence with RSI in the weekly chart, good slope level. So all these things, to me, not really painting the perfect picture for a dollar yen long at this point. Throw it out there. Obviously, all that really matters is the price chart. So, if you can literally just forget everything I just said and focus on 12, 20, 30 for support. If you hold that, it's a nice long. I wouldn't give it much room below that level. Okay, I'll get to questions now. We've got nat gas, wheat, S&P DAX, 10-year. I will say Mahai will look at the S&P, but I don't think it's moved in 2 months. Like literally, I don't think the S&P is moved. It might be at the exact same level. Okay, natural gas, daily chart. Well, this is no longer. I'm looking for and have been looking for a big rally in natural gas. Every time it rallies, it totally fails. So, but yeah, I mean, we are holding this though, right? This is a very important fork. Trend line just back to March 2016. And this is the trend line that's been broken and retested 2 days ago, turned up higher, gapped open today, and turning down again with energy in general. So I'd be looking, I'd be looking towards this region here, about 330 in natural gas, okay? So resistance here, this is 200-day average right here. So you're messing with some pretty important stuff near term. If I go to an hourly chart, it does look like a 5-wave move to the upside. And I'd be looking for support down here. So again, daily chart, really important support, must hold, important, hold on the top side of of this level, and 5-wave move. So look for support, 60-minute, just draw a fib. You know, 297, 298, probably want to see that hold, take it higher. Wheat, I haven't looked at. I'm actually starting to get interested in corn, which we can take a look at next week. So we're starting to run out of time here. But wheat has made it to an initial resistance point. Right here, 460. That's the median line. For wheat. Okay. And you can see just over the last year, or during 2017, first of all, to draw this, it's a shift fork back to the 2008 high, all right? But obviously critical resistance, gap, support, resistance. We're back at it now, resistance. So you do have the 200-day average at this point below, which is certainly a positive sign. Might have something here to work with, right? 200-day average, again, it's down here. It's pretty useful in terms of you can get that high there, 448, 445. I'd basically look for a hold between 445 and 448. And that's in terms of wheat. Okay, so look for a hold between 445 and 448, and then look to take wheat to the upside. S&P 500 and DAX is next, and then we'll look at the 10-year, and then we'll look at pound CAD. Okay, so let's go to let's start with the DAX because there's actually stuff to talk about on the DAX. I was looking at it last night. We have taken ourselves, so we found a low, right? And we were kind of right in the sense that in order to get a euro-dollar decline, you're going to need to have the DAX head higher, and that's happened. We're starting to run into resistance now for the DAX, right? You've got, this is the CFD, so this is the German 30 CFD on FXCM, but you do have a parallel right here that you're at basically right now, and then a little higher at 12,812, you've got the upper parallel, which really hasn't been as clean as this, but it's up there, and you have high day close, or what I like to call daily reversal resistance, right? So I think you're going there. And that might actually coincide with the next turn in the euro. Right? Go up here, euro drops, turn over, euro rallies. And we can kind of see, 1, 2, 3, maybe a sideways 4, 5, something like that. So the move is getting a little stretched, and we are at resistance. So that high is what I would be looking at in the DAX. Again, resistance now, but better resistance probably about 12, 8, 12. Okay. Moving on to where were we here? The S&P 500. Get rid of this analysis because it's clearly wrong. So I think I said the next level I think last time we were talking about this, we talked about the last, or the next level, next square root level on the upside at least was 2536. Yeah, 2536. Okay. And you see this level here. We'll make this the red one, kind of traction point. That is the parallel that extends up off the uppermost point of the trend, which is actually from February of 2015. Okay. And that's going to be, up in that range. It's actually not quite to 2536, but, it's kind of where I'd probably pay attention to at least. So, wave count wise, 1, 2, 1, 2, 3, 4, 5. So maybe finishing a third wave of sorts up here before you get another pullback in 4 and another rally in 5. Okay. Now, those of you asking about general indices, I would refrain from trying to short a broad-based index. There are things out there because we're going through a big rotation right now. So, if I bring in, say, like we talked about yesterday and the last week, I dedicated a good portion to the bonds, right? And we'll look at the 10-year here in a second. But higher rates, there's things to short. So like, XLU, which is the utilities, that's a short, right? That's a short. Actually coming up on the first possible support, I would say. I would say that, XLF and XLE, those are actually breakouts. All right, so here's XLE. XLE, rocketed higher again this month from a huge price level. But yeah, things like XLU, maybe tech. So maybe like XLK, which is the technology. Although maybe you want to go a little higher. I don't know. That would be up here, 6057. But typically higher rates are going to be things that, probably hit tech, rotation out of tech into things like energy. All right. Let's look at the 10-year and then. So did you, let's see, we had a question. Mark, that was Mark. Mark had a question. He said, you want to look at the 10-year, you want to look at the 10-year, like the 10-year note, like the treasury, like contract, or do you want to look at the yield? Oh, 10-year, you said US 10-year. So is that the yield? Do you want to look at the yield, or which one is it? Yield. Okay, dokie, yield. We'll do that. All right, so TNX is yield, and this is clearly not a correct quote because it says the 10-year yields at 23%. That didn't even happen in the early 80s, late 70s, so that's not correct. Let's see here. Go with the end of day. We'll look at it that way. All right. So here's the 10-year very long-term weekly chart, right? Long-term slope of this, and turn higher. To me, I know that so there's two things here to say. One, this is really bullish on a longer term basis, okay? This is 5 up, and then you got a dip, and then it's higher, okay? If we look at it on a daily chart, $244 or so is probably going to be a good test on yield. Okay, so you've got, we have a breakout on a trend line here, right? But I kind of would trade between these slopes, and why not? They've been great all year. Median line, right? December, and then again in March. So that was, those were good resistance levels. The latest low is just below with the 50 line here, right? You've got another line up here, parallel, which was resistance back in July. So I would look there as far as resistance, Mark. 244 on the yield. And what is that? Maybe a retracement? I don't know. Might be a retracement. Not really. 244 is the yield, is where I'd look as far as any sort of resistance. Okay, and then finally, last one, and then I got to run. But we had a question on pound CAD from Nicholas. I see the 200-day average right here. Just overcome that. This is actually interesting chart. Okay, so you've got just a channel. I mean, this is 2010, 2013 lows, and both of those levels were support, right, in 2017. So, or, I say two lows in 2017 at that trend line. And this is the median line for that channel, okay? That median line, we'll go to a daily, zoom in. That median line was support back here. And then recently, it's been pretty interesting. It was support in June and resistance up here in August, and we're at it again. So this, I'd be looking for a pullback off this. Right, looks like a good 5-wave rally. Probably got some serious divergence up into the highs. I can kind of tell by not even looking at it or at momentum, but I can kind of tell that you've probably got some serious divergence into the highs. Let's see. Yes, you do. Right, so pound CAD. Yeah, I'll leave it there. That's what I'd be looking at. So pound CAD, good looking chart. Pullback, and lo and behold, look what we got there. This chart's so good looking, it's going to make me want to trade it. Look for a pullback and look for support at 63.55. Okay. Boom, boom, and then go higher. Cool. All right. Everyone, thank you for your time as always. It's always a pleasure. I get a lot out of this actually because it kind of helps me see things. Like I wouldn't have looked at pound CAD, but you just asked about it, right? So helps me out as well. And everyone have a great weekend. Great rest of your week, what's left of it. A great rest of your September, what's left of it. And looking forward to the fourth quarter. All right, take care.